Okay, guys, welcome back. Today is January the 21st, and we're going to talk a little bit about trend lines as well as support and resistance. We're going to kind of go over what we went over to make sure that we have at least some decent understanding. We're making progress. We're also going to talk about qualifying some stocks. So we're going to jump right in. So let's see here. We will start with one second, because I wasn't ready. I'm going to go to Yahoo Finance, in case you want to follow along. Certainly, you'll see it on the screen. And we're going to talk about fundamental analysis a bit, the very basics. So here we go. All right, should be coming up just a second. All right, so you should be seeing Yahoo Finance. Yes, thumbs up.
Yes.
Thank you. Just making sure. And so what I do after I've created a list, whether it's a watch list or a list in a notebook of stocks that technically look like they may represent an opportunity for me to make money, I want to go and think about fundamentally, what does it look like? Do they earn money? What industry are they in? Do they have earnings? Again, is there an earnings per share date that's coming up? Do they have a lot of debt? Do they have any cash? What's the share structure look like? Those sorts of things. What's the news kind of look like? So we will use SPZI as an example because I've been using that as an example the last few weeks. And when I'm looking for fundamental information, a lot of times I like to start with volume. I want to see if the stock has any volume. Because if it's only trading 1,000 shares, well, that's not any volume for anybody to work with because it's not liquid, Sharonda. You've got to be able to, someone's got to be able to, money's got to be able to exchange hands. Shares have to be able to exchange hands. And if there's only 1,000 shares being traded, that's not enough shares for us to be able to consider a stock liquid. So I'm looking for ideally stocks that have at least 1 million shares traded a day. And so when I look at SPZI, I can clearly see they've been in the millions for a while. And the reason why certainly they've been in the millions is because the share price is so low. So always keep that in mind. It's almost worthless right here on December the 7th. It traded, 6 million shares. And so I see that there's a lot of volume now. So something certainly must be going on. We're in the 30s, we're in the hundreds. Something's going on. And I also can see from looking at this historical pricing data, it's right up here, historical data. I can look at open, high, low, close, and it can start to tell me some things. So if I go back to where there was no volume, here at 0002, I see that it opened at 0002, the high, the low, and the close. But then there was this volume spike right here. We went from 6 million to almost 38 million. And we opened higher. So that's called a gap up. It gapped up at the open higher than where it closed. And the stock ran a lot. We went from 0003 to 0013, almost 10 times your money, quite 10 times your money, but a healthy amount of money you made on this date, December the 8th. The low was that where it opened, and it closed at 001. So nearly 10 times your money in a day. And then the volume exploded the next day. So, I can learn some things by looking. And as I look at some of this, I know that certainly there must have been news, and I need to figure out what that news was. So really, I'm just kind of looking for some consistency of volume. And I'm also looking for, does anything kind of tip its hand? You know, because if this were the date in question when we first discovered the stock on the 7th right here, and all of a sudden out of the gate, you know, it was on my watch list, and I see that it's trading 10 million shares and it gapped up at the open. And that should be like, hey, something's going on. Let me go check the news. And sure enough, there was news. And before the stock ran away from you, if you liked the news, then you would go ahead and make a purchase. So fundamental data can help you discover things, and it can tell you some things about a stock. And I can just, again, sit here and look at the closes. We went from 0002 to 001 to 11 to 12 to 15 to 19 to 22 to 2. It just keeps going up to 29, 30, 33. People have made a whole lot of money for the folks that bought 0002 or 0003, 32, 38, 41, 5375.
That's crazy.
Yeah. So from a math standpoint, because you guys know I love to do the math, you can't fully appreciate it without doing some math. We will see that the stock, and I know this is a crazy example, but $5,000 divided by 0.003, if you saw the news and you got it when it opened, bought you 16,666,000 yada 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 shares, almost 17 million shares. If I multiply that number, say you sold it at 0.53, you didn't even sell it up here, 0.0053, your $5,000 is worth $88,000 just days later, because you bought it on December the 8th when it opened at 0003, and you ended up selling it just days later at 5.3. So it was less than a month you had to wait. And if you look at that gain, divide that by the 5,000, that is 18 times your money, in just probably a matter of a week and a half. So big gain on your money. So gleaning some things from the volume and the closing prices. I don't spend tons and tons of time here. I'm looking for volume. I'm looking to see kind of what was been going on over the last maybe few weeks. And then I'm going to move on to statistics. And there are lots of places to get this information, but Yahoo has it the way I like it. So I just have always been using Yahoo. And so when I'm looking at fundamental analysis, I'm just kind of scanning through, seeing if anything jumps out at me. If we have a bunch of NAs, that means, you know, the stock wasn't doing anything for probably a while. And this is more of a shell type of company where there's really nothing going on. It's a shell that someone can come into. This wasn't quite that scenario, but just about. They really weren't doing anything. It was a cannabis company that wasn't really making any sales. And so I can kind of see, you know, some of the financial highlights. This is outdated information. We're at 2024, so I know they really haven't been doing anything, probably really not reporting anything. Supposedly they had some sort of revenue, a little bit of revenue growth, quarterly revenue growth year over year. That's what YOY means. So last quarter, you're a salesperson, that particular quarter last year. So they're up about 20%. It's kind of looking at some of the metrics, you know, cash. They really don't have any cash. They got less than $3,000, but they have all of this debt, almost $1 million in debt, which when you see a big disparity between cash and debt, it makes you wonder, will the company do an offering? And an offering is where they're offering shares to the public, or they're offering shares to institutional investors or private money managers. They're offering part of the ownership of their company in exchange for the money. So they're doing an offering. Hey, I'm offering you this. And typically with offerings, it's at a lower price than where the stock is currently trading at. So a lot of retail investors absolutely hate offerings. However, offerings do present an opportunity for you to be able to make money, because sometimes, say a stock was trading at $1, and the offering's at 50 cents, this is what they're going to sell to some of these private money managers. The stock actually may open after the announcement of the offering at, say, 27 cents. And you're like, oh, these guys are buying it at 50 cents. And we're currently at 27 cents with an overreaction. Maybe I'm going to go ahead and buy some of that dip. And then as it recovers, I just get out and take my money. So there's a lot of ways to play things. So I'm looking through this information. It's kind of a red flag with the heavy debt and the no cash. And so, but the big picture in this particular stock, none of this really matters because they had news. And the news was, if I go to another section, summary, if I go to summary, you can see back on right here, December the 8th. Remember when the stock started moving? They had a shareholder update.
Right.
And that update was that it's a memorandum of understanding that John K. Park will assume full control over this entity, this stock and everything that comes with it as far as share structure and everything else. And so if certain things need to be canceled, if there were agreements amongst, companies out there, a lot of that stuff just gets wiped out or canceled. And they'll figure out how they're going to do that. So it says the control is expected to be transitioned within the next 30 days, yada, yada, the Colorado Secretary of State. And it goes on about, how all this stuff is going to play out. This
So
person,
it sounds like it created some excitement in the market. Is that kind of?
oh, it sure did. And that's why the stock ran, because the stock wasn't doing anything. Some people may have had some money in it and they weren't making any money because the business wasn't doing anything. And so this Paul Strickland person says will remain as CEO until they, transition to Mr. Park. And so sometimes I take time to look into who this person was or is. And this dude has an interesting story. He's a lawyer who does some things out of New York, and I don't know. But this person seems to be above board who's taking over the shell. This person seems like he had some run-ins with the law and how he did some things. But anyway, it seems to be in capable hands now, and the stock has responded accordingly. And so if you, again, look at the news, the symbol's going to change, as well as the QSIP number. There's a QSIP number assigned to the stock itself, SPZI. That information will change. And so now as you see news coming out finally on this stock, he's letting you know, hey, we've executed a commodity contract worth 53 million. Hey, we've these commodity contracts year to date were 90 million. Like, they're starting to do things, this new company that's coming in. And so the stock has just been flying. And so I own it. What I've been waiting for is the sugar contract. This particular company does a lot with commodities. They sell chicken paws from Brazil to China. I didn't
What
know
do you
it was
do
such
with
a thing.
chicken paws? What are they doing with
I
that?
guess they eat them, I suppose, chicken paws. So apparently a lot of people in Asia, and I don't know how many people in the US, they eat chicken paws around
Okay.
the globe. I guess, it's probably nothing new. Heck, we eat chitlins here in the US, so chicken paws are probably better than chitlins.
I would assume so.
Yeah, for those of you guys watching, chitlins, in case you did not know, are pig's intestines. So maybe I want to chew on a rubbery chicken paw. Maybe there's some meat there versus pig intestines. Whole nother story. So anyway, this company's doing some things. So I'm checking news as it relates to some of the fundamentals. I'll read through the news. Hey, what's this company doing? What kind of contracts are they getting? What business are they in? Does this sound like legit news, or is it just fluffy stuff? That's really not news. But if you're starting to show me money and contracts, well, that's concrete. I can sink my teeth in it. This is actually news. And so I want to check news. I want to check stats. I want to check historical data. I might look at the profile of the company and go here to see if there's a number and an address, if there are any full-time employees. Is there a link? Typically, it's right here, which all of this will change, to their website. I want to click on their website. I want to see what that looks like. I could look at, financials in a bigger, sort of more detailed picture versus the one I see in the statistics column. I may want to check to see if there are any holders of the stock. Maybe if I click on holders, it might say the Vanguard Group, BlackRock, T. Rowe Price, what mutual fund companies may own the stock. And then one of the main things I don't need to check the chart because I do that on the financial. I do that on the technical side, technical analysis. So I never ever really click on the chart here unless I believe it might show the look in a different way that's a little bit different from Thinkorswim. Sometimes I may click on it just to see what a lined chart looks like versus a candlestick chart. And I can change all that right here. Do I want to look candlestick charts? Because that's what I'm used to. Or do I want bar charts, which shows me the low and the high and the close? That may be easier for people to read, especially when you're new. So clearly you can see what that looks like. The close is on the right-hand side. The open is on the left-hand side, right? So here was the open right here, this one, and here's where it closed. And clearly you can see this is the high and this is the low. Yes?
Yes.
Okay, so making sure. So you can look at charts in different ways and you can draw lines and do some things and do a whole lot of different things here. So sometimes I may take a peek at it to see if I want to see it in a different way, or it may show me a different time frame that I want to look at that I don't have already preset on Thinkorswim. So, to show you that a little bit better so I can see it differently. Because seeing, it's not necessarily seeing is believing, but seeing helps you visualize what is going on. One of the main areas, and I'll pause after this for questions, one of the main areas I look at, we did talk about statistics, but what I did not talk about is this side here, which shows you the high of the year as well as the low of the year and what the 50-day moving average is. People trade against averages, especially if a stock is going through the last 50 days. Tell me how this stock, what is the average share price this thing has been trading at? And when a stock goes through a particular average, you can have a 10-day average, 20-day average, 50-day average, 100-day, 200. Those are the main ones. It tends to be very bullish. It tells you that over this average over whatever the time frame is, folks have been bidding it up. So it's nice to know what the average is for some of the statistics that they already do for you. And then I like to see what the average volume is over 3 months. It's 49 million and some change. But what is it in a shorter time frame? Hey, the volume has been a lot greater over the last 10 days, and the stock price is probably higher as well. What's the reason for, the 10-day average to be higher? It's probably because they've been putting out news and more people have been buying it. One of the big things I like to see is what are the shares that are outstanding? Remember, we spoke of, we have authorized shares, meaning how many shares am I authorized to put out there? Then you have shares that are outstanding, what's actually out there. And then you have the float. The float is once you back out institutional investors and insiders, what is at the smallest point really being bandied about or traded out there. And this information all has to be updated because a new company is taking over. So the share structure, we're all interested to see if the share structure changes because 5 billion shares is a lot of shares.
Okay.
But if the float is only, say, whatever, 200 million, well, that's a good thing because the thing is trading like 66 million a day. So if you have a lower float and you have heavy volume as it relates to the percentage of the float that's being traded, you have an opportunity for the stock to be moved. And that's what we like as traders. So another example would be if we went to an apple orchard, Sharonda, and people listening later, and a lot of people showed up and apples were in season, but there were only 1,000 apples, but 3,000 people showed up and they wanted
Right.
apples, the price of those apples
The demand would go up.
certainly, obviously, hopefully they don't change the prices right in the middle. First come, first serve. Once we're gone, we're gone. But that's kind of, the thought of if you have 100 million shares, but you got like 60 something million that are folks that, they're changing hands and, that's a healthy amount of what's available. And if news is good, you have an opportunity for the share price to rise. So looking at that kind of information is helpful. And as you get familiar with what you're looking at and you have a system with which you use to find stocks and trade stocks and qualify them, you'll figure out what's most important to you versus what you don't really need to look at. All right, that's a good hard stop there. What questions would you have about?
Could you go over just the charts again? I wanted
Yep.
to see the open and the close. I may have missed something.
So on this particular thing or the
It was
Thinkorswim?
no, the regular this
This
Yahoo
one.
Finance
Okay.
chart.
Yep. So
Now you always use the candlestick, but I think you used another type of chart. I
I
forget. I don't,
I did. So right here, it just gives
right.
you lots of options. A line chart is obviously a line. So
Yeah.
it just shows you can kind of see it. Okay, stock's been going up, pausing, a line chart, I can draw some other lines to show me the upward trend. I would take this corner, connect it with that corner, this corner, and kind of extend it out. So if the stock rolled over to where it would be support, say it was down here, if I extended, well, let me just do it here. Hold on. Draw line. Let's see if I make this work here. I don't use this technical analysis, so it may not work. There we go.
Okay.
This would be something you'd have to play with a little bit. Boom.
I don't really like this one, this chart. I like the there was another one you used. I don't know which.
So hold on, we'll look at that's line, and then we'll see what area. It just shows you area.
Okay, that's
That kind of
interesting.
fills it in. You're like, okay, because visually, oh, okay, I see what we're doing.
Right.
These bars are green, the stock went up, red, the stock went down for the day.
Okay.
And
And you could see that as well too.
sure,
So.
yeah. Candlestick we are familiar with a little bit.
Mhm.
So if this was our line, of course, it's a little bit different because candlesticks are a little bit different than the line, that this was our upward trend line.
Gotcha.
Where we find support, bouncing off here, came down here, and guess what it did? It bounced, didn't quite hit it, but it bounced. And then if this stock rolls over, if we could see the right-hand side of the screen and days from now it rolls over to down here, this
Gotcha.
line is extended out, and then we would be looking at where would we find support. Maybe it's around the 0075 area. And then the next one was hollow candle. You see that look? It's different from
Mhm.
the other one. And then we have bar. So like here, the high was at the top of this thing. The close was the arrow to the right. The open and the low of the day was the kick out to the left, that little
Okay.
to the left. And as stocks start to expand and the difference between the high and low, the candles, or in this case, the bars are longer, you can see, we gapped this close right here of 4-1. We
Gotcha.
opened, which it's not going to hover over it, but I can see to the left right over here, we opened at 4-3. So I know it gapped up because we closed right here at 4-1. You see the close?
Mm-hmm.
The left, yeah. So we gapped up and we closed near the high. And then it
Yeah,
looks
that was
like,
good.
yeah, it looks like we pretty much opened where we closed here and we closed near the high. Stuff gets a little tired sometimes. You have to understand when a stock runs and runs, if you're in a stock that has been running and running, what do you think you might do? Sharonda, what do you think you might do if the stock has been running and running?
When you say running and running, like just going up,
Yep.
eventually I'm going to try to figure out what point I want to pull out so I can
Yes.
get my money.
So right. So
I don't want
right.
to
So the
pull out at
stock
the
has
right
been
time.
yep, it's been running and running, and then it really started running.
Getting
See how
excited, but I know that there's going to be a point where it's going to stop.
where people want to take some profits. And it was
Yes.
right here on this day. As the
Okay.
stock lifted off, it's like an airplane going down a runway. It had a
It
couple of
just,
bumps, I can't go. And then it was like whoosh. And then people took profits right into this
yeah.
whoosh. And then it kind of bandied about. They're like, okay, some folks want to stay in, some folks want to stay out. So we kind of held this area. And then we're like, then we dipped down because we closed down here. And then we opened higher than this close, but we dove down. But
Mhm.
guess where we dove down to? Support range. And people came back in and they bidded it all the way back
Back
up.
up.
So that sort of move, just logic, it's not logical if you're not used to it. Logically looking at it, this overall scenario, this tells you that it was strong because you had some selling in here and then we closed on the low on this day and we opened a little bit higher, but then they dove it down, but buyers came right in and they drove it all the way up to almost the high of the day. That's what that's telling you.
Yeah.
And then the next day it opened higher than the previous day with only a small pullback, right? You see this one to the left?
Yes.
Small pullback, and then we went higher, right? We kept going up and we closed at the high of the day on this day. Very bullish. And then guess what people did? They're like taking some money.
Right.
Took the money, closed towards the low of the day, and then we opened higher, but there was more selling, and we closed at the low of the day towards the absolute low of the day. And then we gapped up again. We were not quite sure what we wanted to do. We're in the middle of this trading. We opened higher again, and then we kind of topped out. And then, we're trying to make our way back up.
Right.
So
So let me ask you a
go ahead.
question. In a scenario like this, like you gave you said there was a $5,000 investment and it went up and let's say you made about $80,000. Could you have done something where you were able to leave the original $5,000 in the pot, or like you
Without
take
question.
whatever,
Yep.
like just the profits?
Yes.
That makes sense.
Oh, without question. People do it
Okay.
all the time. It's called writing free shares. Because they'll take all of the profit, the $83,000, and they're just leaving the $5,000 in. They've already made all it. They've made a ton of money.
Right.
Now they're just this 5,000 is just like free. It just sits there. Those shares, it just does whatever it's going to do. People do that all the time.
Okay.
That's a strategy. People want to get the money, take out their cost basis, and then they're writing free shares. They may not take any profit. Sometimes they just take out their cost basis and ride what they're doing. Or what they do, they'll take out half the profit and let it ride. So I got my money back plus 50% of the profit, and I'm going to let the stuff ride, the rest of it. You do it all the time. I usually don't ride free shares, but it certainly is a good way to do it. So
Well, I was just thinking if you rode the shares or whatever, right? Like you took your profit out and you kept the 5,000, you could that's the 5,000 you can continue to play with.
Sure.
So that was just my thought process of
You're thinking the way you should be thinking, which is good. Yep. People do it all the time. So the last bar is this colored bar. So you can see, excuse me, that green, it finished higher for the day, red, it finished lower.
Gotcha.
Depending on how you want to look at the information, it helps you get a sense of what's going on. 4 days up, 1 day back, 1 day that was just kind of because it's in black. And we went red, went green, green, red, red, green, and we're kind of working our way up. And then I could draw a trend line here if you liked bar chart. I'm sorry, Yahoo, and do something like that. And so the uptrend was this bar, this line, And then we pulled away from that line. We're like, oh, we're going higher. We're climbing like a 747. And so now we have a new point, this point, and then we have some support right here. And this will be our other line. You're like, okay, I see where it's found support. And guess where it's been bouncing off of? This line now. This is the new support line.
Okay.
But if somehow this thing really dipped down and we were back down here, this would be like major support, what I would call it.
Gotcha. Okay.
Yep. Does that make sense?
Yes, it
You've
does.
got to draw your lines and think through. It's a thinking person's game. Like, what are we doing?
Mhm.
Where do I need to enter it? So now I need to look at the stock in different time frames so that it'll allow me a favorable entry point. And so that is why when I say look at the stock the monthly, weekly, daily, 1 hour, then really drill down into the, the 30-minute, 15-minute, 5 minutes, so I can find kind of what it's doing, where would be the ideal entry point. But you've got to be able to process big time frame, mid-range, because if the stock is down for the day, but the weekly trend is up,
Yes.
that's a good thing. You're like, oh no, for the week, we've still been going up. We're just having a momentary pullback. If these were all weekly candles and the stock was down for the day, but the week you knew this was going to be where they would find support, you might enter it. This pullback on the daily, like, no worries. It's been holding this uptrend line on the weekly. I think I'm going to dip my toe in the water right here on this daily chart because I feel like they'll find support right here based on the bigger time frame. Does that make sense?
Yes.
Yeah. And so it's just a process of literally of processing information in your brain as you're looking at stuff. And the better you get at processing information, the more money you tend to make. As long as you enter things correctly, your entire way that you move money is systematic without emotion, then you'll find that money will follow you. It's just a transaction. Like we're going to dinner and we're eating some Chinese
You're gonna
food,
pay.
right? We're gonna pay and we're leaving. Bye. Right. It's a one-off. We're not trying to get married to the waitress and the waiter. We're just here to eat some food. So questions about any of that? Fundamental analysis, technical analysis.
No, I appreciate the fundamentals, you going over that again, and some of the technical and just really kind of diving into the companies and what they do and historically, just looking at some of the historical data. That's really important for me to understand. So, no, not really. I mean,
Okay.
I
So
think you
let's
summed it up very, very easily.
good. So let's drill down even more. So now that we've got glasses, now that we got a framework, we may do this.
Now, do you have this is what you do every day, all day. So
Yep.
do you have something like when you're out and about, like do you have alerts set up on your phone or
All day long. You're looking at them right now.
okay.
See these alerts?
Yep.
Alert me when blah, 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 blah,
It's to
blah.
this level or
Yep. And
okay.
the alert in the system that I put either in the laptop or my phone, because I'm busy at times, with
Mhm.
school, I'm probably not going to wouldn't respond to it if it was on my phone only. I might be talking to a teacher or whatever might be going on.
Right.
And something may gently buzz my pocket and I'll just ignore it. And I'll totally forget about it too. But if it zaps my wrist, I just quickly look. It's like you're getting shocked. Right?
So you have something called controls in place.
Yes. And then I look, I'm like, oh, XYZ stock just went over the number that I wanted it to go over. And then I may take out my phone and I may purchase, or I may have a buy order already in if it
Okay.
hits a certain point. Just like I have a sell order already in up here. If this particular stock ran, I would sell almost these 3 million shares at let me hover over it.
Can you just in just layman's term talk about buy order, sell order? Like what are the parameters? I'm just giving me some examples.
Yeah, whatever, so let's see here, the market's closed, but if this stock was going lower and I said, okay, I want to buy it, if it hits a certain point, I would just click on buy,
Okay,
and then I would, if I wanted that exact price point, say I wanted say I wanted this price point, made this bigger, and I can see it on the right-hand side. I really want to buy it if it hits 432. And
okay,
I'll just right click it, buy it. And I already know it's at 432 because I'm looking at it and I don't need to edit it. And it also recaps it right here. It says, what the cost of the commission would be. I want to buy, in this case, looks like they have it set up to buy 100 shares is the default button of this company at 432, because I told you it was at 432.
yes,
And then it'll calculate the cost of the commission, and then it'll purchase it. But if I needed to edit that price point, I can just move it up or down, or I can type it in. And that is a limit order. I don't want to buy it unless it hits this particular price. But
okay,
if I wanted a market order, then it would buy it at the market when it hit
okay,
that. I have the opportunity to buy something at the market where it'll automatically go through. So I don't
okay,
think when it comes back, I don't know if it'll do it this way when it comes, if it's going lower and I have a market order, would it execute just at the market versus a limit order, whatever the best price is? Is it the trigger at 432 triggers the market order? A market order is like, hey, whatever the best price is, they're gonna fill it.
okay,
So I haven't done it that way. I typically do limit orders. Like, I don't want it unless I can get it at this price.
okay,
Yeah, so a limit order. And then, is this good for the day? Meaning from 9:30 to 4? Is it good until canceled, which may take it out a couple of months? Hey, I want to buy the stock if it ever hits 432, good until canceled.
gotcha,
If it's extended hours, 7 a.m. to 9:30 and also 4 p.m. to 8 o'clock. So it may be an order that I want to buy for the day, but I want to buy it in extended hours, regular hours, extend it before and after. And this is good until canceled that will include extended hours. And so it looks like there's some other options down here. If I click on these buttons, let's see what that does. I don't know what that is. Guess that just changes it to AM for whatever that is. I don't know what that is. Maybe it's just talking about I'm going to buy it in the morning. I don't know. And so there are some options here. I guess, TIF instructions. I'm not sure what that is. I'm just going to put none. Exchange. Looks like, what exchange do I want to buy it on? So this is the best one, best available. I don't really do anything here. If I want to change the quantity, I want to buy 1,000 shares of it. I can type it in or click on it if I want to change. You have no existing position in this security. All right, I know. If I want to do a dollar amount, say I want to do $1,500 of this security. Am I on the buy side or the sell side? I want to sell $1,500 worth. So in this case, if the stock ran from 5,000 to 88,000, you may say I want to sell $83,000 worth at this limit price, and then I save my $5,000 that's still there. I just want to take
okay.
all of my $83,000 gain out, and it'll just
So once you see that it's 83,000, you subtract the 5,000 out of it to get the difference. And that's what you're saying?
Yeah, well, if it was 88,000, yeah, you would subtract the 5,000 out. So if I'm going to sell $83,000 worth, I'm leaving my $5,000 in.
Okay,
I'm just taking the profit, because your profit is 83,000 because you put 5 in. So your profit's not 88,000. Your profit is obviously 83,000 because you have your $5,000 initial investment, which is not profit. That was already your money.
gotcha.
So yeah, lots of ways to do it. There are options. There's all sorts of things. So sun above my head is very loud. So if I'm looking at pick a target. Let's see here. TGT. Yep. So target, we'll put target on all four. So I can make these the color, red, red, red. I can make them any color that I want for whatever the reason is, you know, to tie them all together. Maybe I have two of them that are red and two of them that are yellow. So, and then if I only want to look at something that concerns the red information, like, you know, news and stuff, maybe I'm only dealing with the top part or the bottom part or the sides. There's lots of ways you can kind of set stuff up, but I'll set them all up in red so I can look at the stock in different time frames. So we'll use target as our example. Weekly, daily, hourly. So, Sharonda, what is the, that's weekly. How about what does the monthly? What is the monthly chart? Just looking at the picture, what's the stock been doing? From way back starting here, what's
Looks
it
like
been
it's
doing?
been going down.
Right? So I would take this. I like green to green. You can do this corner. Pretty much these guys are even here. So I click in this general area, and the stock clearly on a monthly basis has been going down. What's going on? What is this line called?
The trend line,
The down, yes,
the
down
downtrend.
You got that right. So we fell hard, as you can see that, right? Something happened in the month of May. I'm sure I can go back, and there was news right here because the stock fell hard. And then what's the word that I always talk
Got
about?
resistance.
Uh,
Whoa.
we had the CH word. It's in a channel.
Oh, it's in a channel, yes.
Yeah, clearly this is in a channel, right? Just doing this number. So it's just
Kind of
just
hovering
holding.
around the same area.
Yep, it's holding in that channel. It's holding in this range. You can call it a channel. You can call it range bound. The stock has been range bound for months.
Oh, wow.
And then this line right here would be called what? Just this line. What's it doing? It's bouncing off.
Is that the resistance? Well,
No.
no, that's not.
Starts with an S. Support.
Oh, support. Okay.
Yeah, so no worries. So this is resistance then, right? If we're in this channel, we're in this range, and this would be support. So the stock has been going like this, and we have this overall downtrend. And then it broke through what? Starts with an S. Support.
Oh, support.
Yeah,
Okay.
I'm sorry. I'm not being specific. This candle broke through support, right?
Okay. Yes.
Yeah. And we also had some volume as this thing was
A
going
little
through support.
volume. Yes.
Yeah. And then what do? We channeled again for like 3 months.
Yeah.
And then it broke through that support. And then we found this little bottom in here
Okay.
where we have this almost a little doji in there. I'm going to make this bigger. Remember, typically, and this is not a doji here in the purest sense, typically it'll look like more like a bit like this, but with a skinnier body, longer wick, but a skinny body. It's more like this thing, you know, but it's never perfect. But what it represents, again, is some indecision. It's called a doji candle. Like, you know, you were high, you were low, and it was right there in the middle. And you guys just kind of hung out there. We don't know if we want to go up or we want to go down. So not really a doji here. It's kind of nice where we were down, but we closed near the high. So that's telling you, hey, this thing hit a low of 102, but buyers came in and kind of bid at this thing up. There might have been news or might not have been news, but this kind of looks like this could be the bottom. And this was the month of October. And then the month of November, we got a big giant green candle.
Yeah.
Nice. And it closed at the very high of the month. It's probably news. Or maybe Target in the month of November gave some really good forecast and said, hey, you know, Christmas shopping and the holiday shopping has been through the roof.
Right.
So forecasted some good numbers. And then what was this line called right here?
Trending down.
Yep, the downtrend line.
Trend line.
Right. And so what's the rule if we're going to break through resistance of this downtrend line? We need, what's the percentage?
5%.
Yes, ma'am, with good volume.
And
good
yes.
volume. So this line roughly was 126. So it's about 132, right? 5%, 126 times 105% is, yeah, 132. So did we close at 132, the time frame, with good volume? We
Yeah.
closed, look above us right there, 133. So it's a ding, ding, ding. We're closing out the month at 133. You're like, maybe I'll dip my foot in the water at that 133. Looks like we're going to close the month out at that price point toward the top too.
Mhm.
And then if you held it next month, we hit a high of
Yeah.
142. Now that's only $10 on your money from 132. So 10 divided by 132, rough averages, is 7, almost 8%. You only had the stock for a few weeks and we're up 8%. You're like, well, maybe I'll take it, If I have
Mhm.
$5,000 and I made 8% of my money, I obviously made $400. And maybe
Right.
you're like, what, $400 pays the car payment.
Right.
Sold, and because on the lower time frames, you could see that it was waffling in here. Wasn't quite sure what it wants to do, but it needs to get through this high of 142. So for me, I'll create an alert.
Okay.
Create an alert me if this stock is trading at 142, just so I can get ready. But ideally, the perfect way to do it, the better way to do it is, what's 142 over that resistance little area times 105% is 149. So I might put another alert, say 149, because I know that represents the 5%. What I started to do now is not even do an alert here. I might do an alert on the bottom side at 133. Alert me if this stock I can buy at the ask. What are they asking for it? Alert me if that ask is below 134, whatever the number is, right? So I
Okay.
know that it's kind of broken out of this thing. But on the top side, so that I don't get head fakes, sometimes what happens, Sharonda, stock looks like it's going to break the resistance, and it didn't go 5%, it didn't have good volume, and it goes right back into the channel or to the
Okay.
range or to the downtrend. So to prevent that from happening, stick with the rule. 5%, it's going to close that particular time frame with good volume. And so you've got to kind of look at this little maze thing. You're like, okay, here's what I need, and only put the alert in when we're at like 5%. So the only thing I need to do then when it goes ding, ding, ding on my watch, I know this is a 5% ding, because I'm going to stop putting alerts in anything less than that. So I'm not getting these false starts and I don't have time for all these dings that are going off.
Right.
So if it dings my wrist, I know it's something I need to look at. Something's breaking out, or something's breaking out to the downside or to the upside.
Okay.
So we can see what this is doing. This is a bit of, and this is probably too much information. We went through the downtrend line, and this right here, Sharonda, look right here. This is like a cup of coffee. This circle down and a kick out where you'd put your finger right in here. See the cup of coffee where you would pour the coffee right into here? The outline of this is a cup of coffee.
Oh, I see that. Okay.
Yeah. So this is like, old cups of coffee where they had this more circular mugs. Circle, and this is where the handle would go, where you'd put your finger and drink the cup of coffee. This is called a cup and a handle. Cup and handle. So I know if this stock were going to go down, Sharonda, where would it find support normally? Looking at this monthly chart.
Um, the wow.
This line right here, right?
The
Because the more you have
the
to hear the number.
downtrend.
Yeah. Because what was, you'll hear me say this a million times, what was resistance now becomes support.
Support.
So when this cup and handle, because that's what's kind of making, if it decided to roll over, you're probably going to find support somewhere in here in this range. So
Okay.
I will actually create an alert. It's unlikely that I'll buy target, but I'm going to put an alert there, and I already know it's support. And if I wanted to put a note, I could add a drawing, go to the T for text, and I'll put SPT for support.
Oh.
And so I know right there is support. not that I would forget, but if you were new to stuff, you'd be like, well, what did all this stuff mean when I was doing it? Oh yeah,
Yeah,
support
that'd be
right there.
helpful.
Yeah. So anyway, so the stock has been going up. It is paused. So if I were taking notes on it, and we'll maybe do another 15 minutes, I might say monthly. Um, broke resistance, support at 119, and I might say CH for cup and handle, just to, if I were taking a bunch of notes. And then on the weekly, here's my monthly line. I know the bigger trend, we broke through it, which is kind of weird. Let me see something here because it does not measuring up. Weekly, there we go. I didn't have the whole thing swiped because I'm like, something's not right. So here's our monthly line, right? Because we did that over here. So I started with the bigger time frame. Now I'm moving to the weekly. So I know this is monthly, and I can put a little M here for monthly, so it reminds me which downtrend it is. But I can clearly see also that it almost marries up with the weekly. It's very, very similar.
Mm-hmm.
You know, it's a little closer in because we have more candles because it's a smaller time frame, right? And this is this long green candle for the week that gave you all of this one,
Okay.
right? You know, and then it had a few more days in here to make this thing close towards the high of the month. And then it's probably this one in here. So if I'm looking, if this is the week we're in, so we don't have 4 weeks yet. So maybe we have 2, and it's probably these 2, right? And then this particular one is 4 weeks. So we had these 2 for this month, and then 4 weeks, 1, 2, 3, 4. That is December. And here's your
November.
yes, thank you. Your November, which it did close on the high. You can see that little candle is the high of these 4 weeks, right? You can see, let me make it bigger. This candle is the high of these 4 weeks. See how we're close at the high?
Yes.
And that is that. So understanding what is what when you're looking at it, you know, you don't have to really dwell on it. You know, this is 4 weeks, and then there was 4 more weeks for this one, and then
Right.
2 weeks. You can see what it's doing. So now this big picture is telling you, hey, we probably had some news. We broke the downtrend on the monthly. We closed above 5%, and we had good volume. So we're buying the breakout. We could have sold it here for a $10 gain from the 132 to 142, made about 7-8% on our money. Then, you know, looking at the weekly, I can see we start to kind of kick out flat. That's that. You know, the last
Yeah.
2 weeks, you're like, I'm probably going to take the money right here because we're kind of leveling off for a second. Then you can see the cup and handle a bit as well here. Here would be your cup. Here's your handle. It would be a long one, but this is more of, you can clearly see the cup and handle. But this is now looking like a rolling top. And if I look at the trend line, it was going up like this. See how it held it, held it, held it?
Yes.
And then we're looking like we're rolling over.
Yeah.
This was support in the uptrend line, but now we look to be like we're going to break it, and we have broken it, and we have closed 5% below it. So now you're like, all right, well, I'm not buying it here because I don't know what it's going to do. So I might put an alert up here when it breaks through these 3-4 weeks of consolidation. But I know this is support down in here on the monthly. This is my monthly line, and this is my weekly line. So for me, just common sensing it, if you will, I can see that the weekly was in a channel down in here for weeks.
Yes.
Then we had that big thing for, you know, whatever the news was, and then we were in this uptrend, and then we rolled over this particular uptrend line. So now what was support starts with an R.
Resistance.
Yes, ma'am. Yes, ma'am. So it becomes resistance. And so I can extend this line out, and I know come next week, chances are good if this stock starts to roll up to 146, it's probably going to find resistance. But if it breaks through that with 5% in good volume, then we're breaking through this particular resistance area. And so, and we kind of marry that up now with this because my alert for this consolidation was like 149, right? Let me Cover over the alerts. Yeah, 149.51. That's the 5% one above this one. Right? Remember,
Yeah.
5% above this close of 142 roughly. 5% above that's that 149. So you'll get it, so, and then if the stock rolls over, I might be inclined to buy the 118 because what was resistance now becomes with an S.
Support.
Yes, ma'am. So if it rolls over coming down this way, I'm probably going to find some support in here. I'll buy those 118s if it's around that area and then see where we go from there. And that's all we're doing. And we also have support here from this channel because the stock was in a channel or range for weeks. So I have this support line at about 113. I've got this downward trend line on the monthly about 113, 114. So this little sweet spot in here, we got support here from the channel. I've got support here from the downtrend of the monthly. Right about here is probably a good spot to buy it if I can get it about 115, 114. And
Okay.
so as I drill in, I might say, I have my alert. And if I really wanted to buy it and I was going to be busy, buy the stock at whatever. So we're just going to call it 116. I'm going to buy 100 shares.
Right.
Good for the day or good until canceled.
Yeah.
And I'm going to say I want a limit order. And that's just one way to buy it. I'm going to buy it. If it hits that price, that's what I want to buy it. If it doesn't hit that price, I don't want to buy it.
Okay.
And you don't buy it because it didn't hit your price because you have a limit. I'm not going to buy this thing more than this price. So if you're out and about, you're driving, you're traveling, you're in assisted living places and stuff, and all of a sudden your watch goes off saying that your order was executed. You bought 100 shares of Target at $117.37 a share. Good.
I like that. Okay. That's good.
And then what you could do is turn around and say, all right, I bought it here. I don't want to lose more than 2% of my money. I'm going to put a sell order in at 115.
Okay.
Because, I can put it just below, maybe it's a little bit lower, just below this support line, just inside of it, because I don't want to get stopped out. I don't want it to have it close and they dip it down and then they take your shares and you end up losing 2% and then it just goes right back up.
Gotcha.
Just inside the threshold where other investors would come in because they're thinking the way you were thinking, hey, this should be support in this area. This should be a good spot. So I want it just below, and then folks come in where I don't want to get stopped out. But if somehow it starts to go down and Target says their next quarter sales are going to be for crap, it'll automatically sell it. You're like, I'm out.
And you said stopped down. You use that term.
Stopped out.
Stopped out. Okay.
Yeah, if you get stopped out. If I said down, I apologize. If you get stopped out, it means the price came down. You had a sell order there, and it's called getting stopped out. And because you were stopping the loss.
Okay. Right.
You got
Okay.
stopped out, and you're like, I'm out because I got stopped out.
Okay.
You're like, now you're mad, and stock rebounds $127. You got stopped out at 113. You're like, I hate stop losses. But it's important that you do it to protect your money, especially while you're learning. I don't care if I get stopped out a million times while I'm trying to learn it.
Right. I would rather be stopped out.
Rather be stopped out
and lose
because all of a sudden you're on the road and you had no stop loss in, and you look up and you get news on Target and they're having horrendous sales and the stock is at 98 and you had no stop loss in. And you've lost whatever 20% on your money and you had $5,000. So now you're down $1,000 and you're like, oh my gosh. And what happens to you, Sharonda, we'll get off here in 10 minutes. What happens to you psychologically, the pain is not good. Because when you lose $1,000, remember, it's not, you haven't taken the loss yet, because if you didn't have a stop loss in, but your balance is $1,000 lower.
Yes.
So, but even though you haven't, because you still own the shares and the stock goes back up, you still have the same money from where you bought it. But psychologically, it does damage to you. And then the market can start to get in your head and you'll start to talk, I don't know what I'm doing. I didn't do it right. And I'm probably going to say, Sharonda, did you have a stop loss in? No, Eugene. I'm going to do it just like this. And I'll say, what part about having a stop loss and did you not understand?
Let
You
me
know,
ask you a
I'm going to
question
kind of,
though.
I'm going to mess with you a little bit,
Yeah. So
but
when we talk about this stop loss, okay, so just so I'm clear, let's say I put the $5,000 in and I
mhm,
did not have a stop loss
mhm,
and the shares went down.
mhm.
Well, I didn't sell anything.
So you haven't lost anything.
So I could technically still
Regain your money.
just regain it by waiting.
Yes, you sure could. And what people do, they'll average down. If you really liked Target and nothing negative came out and you think Christmas sales were going to be great,
Yeah.
holiday sales, you're like, whatever, I'm going to buy more of it
Wait.
when it comes down. But
Okay.
you got to look technically where the drop dead point is, or you're just going to be what's called being married to the stock. You're like, I'm not going to sell it. My money's going to be tied up now, at least this
Hmm.
particular portion. Say we came down from here, and you didn't put a stop loss in right here, this little mini
Yeah.
2 month area it was in, and you didn't put a 2% stop loss, but below this 132, and it spun on down to 115. You're like, you know what? That's a pretty good spot to add more. So the whatever you bought it at 133, and now you buy it at 115, then that $18 difference, you bring this one down by $9 if you spent the same amount of money, another $5,000. Now your average becomes 125. And then
Oh,
for you to be able to unwind the position, may take you, maybe it's a couple of months for it to bounce here and then it starts to move back up. And then
right.
you're back up here. Now you're actually profitable because your average is 125. So it's about managing the money too,
Okay.
about managing your money. So I always tell people, listen, when you're going to buy a stock, don't go all in at one time. If you
Right.
like Target and you have 5 grand, I'd be like, okay, Sharonda, let's do $1,000 on the first purchase, $1,000 on the second purchase if it's coming down. And you and I know that the sweet spot is right in here. All right, Sharonda, and you really like Target and you want to commit $5,000, $5,000, 5,000 to different stocks. All right, we're going to give it $3,000 right here.
Okay.
This is where we buy the majority of our shares in the sweet spot. But you might say, well, why don't we just wait for the sweet spot? Well, yeah, you could just wait for the sweet spot to buy it, but you don't want to ideally give it 5 grand right out of the gate. At
Right.
times you might do that if you're like, I really love it and this is a great spot and this sucker's going to turn around based on all the rest of the stuff I've seen. All right, we'll give it $5,000. Just have a tight stop in case it doesn't
Right.
go your way. That makes sense?
That makes absolute sense.
Good. And so then when we drill down, like we're doing here, we would just drill down further to the daily to find the spots. And now we're dealing with a lot more candles because now we're dealing with 5 days per week. And then,
Right.
and then so we're drilling down and everything has a trend line. So clearly I made this bigger. I just kind of left click and hover over it and drag it to make it bigger. So looking at this, you would have to know what that line was, which is this line here, the weekly line. So I could put a W here. I know this is the weekly line and it was going up and then it didn't hold support right here. See, it broke support,
Yes.
right? And what was support now becomes, yes, ma'am, becomes
Resistance.
resistance.
Okay.
So guess where it stopped? It tried to turn it. It hit its head several times. And then we're going through
Got
it.
more.
Was
Yep.
this
It broke through.
5%? I don't know. I don't know. It's certainly not 5% because we're at 142 and this closed at 143. And I know that's
Okay.
5%. And so it kicked around because see if you had jumped in, this is the head fake. This is not 5% close on this
Oh,
daily, right? Because 142 and a half, 142 and a half times 105% is 149, right? This is not
okay.
149. It closed at
No, it didn't start.
143
Yep.
and we didn't have the volume to go with it. It was just
No.
average volume. And then we still are not at 149. And then guess what we got here? A bearish engulfing. This engulfs almost all of these 2 days as far as the length. If I drag this down, it engulfs this previous day and it takes away a lot of the gain from this day, which tells you that's negative. And you can also draw some trend lines right here. And what do you see? Not only did it not go through this weekly trend line here, this uptrend where it was trying to get back up, it's going to be breached too. So this little mini 4 or 5 day uptrend, that's getting
Yeah.
breached. And now we're going through it, and now
Yep.
we're going down.
Yep.
So, if you're a good like puzzle person, Sharonda, this will be simple. As you get the flow down, you're like, monthly, I see what it's doing. Weekly, we're kind of in this uptrend. We broke through it. Volume is shrinking too. Not sure, is it just a general pullback from this run, from this week? People made a lot of money. We went from 107 roughly to all the way up here to 142. People who bought the 107s, if they spent grand with a D divided by 107. Let's try that again. $5,000 divided by 107, $107. They bought 47 shares roughly. If they sold them up in here at the 143 times 143, they've made $1,682 roughly, which is a nice return. 1,682 divided by the 5,000 they spent. They've made almost 34% on their money in 1, 2, 3, 4, 5, 6, 7 weeks. So less than 2 months, they made 34%. It's a good return on your money in
Yeah.
7 weeks, right? So it's not surprising that people are taking profits up in here from all of the folks that bought in here. So you've got to think about, if I were them, what would I do?
Mhm.
Stock was in a channel or a range for weeks. 1, 2, 3, 4, 5, 6, 7, 8. It broke through there. All of these guys and gals that brought around 110. Now we're at 140. They're up, say, 30% on their money. 6 weeks, 7 weeks. I'm taking because once you see that it's starting to pause,
It's yeah.
time to take the money. So
Yeah.
it was telling you it was pausing. And then when you're looking at the daily, you're like, this particular line is the weekly line, because you put a W there so you make sure you know which line it is.
Okay.
And then it started to go up. Yeah, this is the yeah, if I did although this looks like a daily too. If I did a daily look, it would be probably more like that following this uptrend here. But this was your weekly line from over here. And as the daily was holding and the weekly was holding, and then it went through the daily and the weekly, right? Here's the daily and here's your weekly. It went through both of them. What was support now becomes what?
Resistance.
Yes, ma'am. And so now it's being resisted on not only the weekly and the daily, it starts to roll over. Here's where you get last call for alcohol. Not only does it tell you here, going across on the daily, you had a top, another top area, another top area. You're not getting through this overhead resistance either. So you have all
Right.
these things working against you. You're like, you know what? Ding, ding, ding. I need to get out.
Yeah,
And
we
when
get
you
it.
see this move here coming down, oh yeah, it's time for me to get out. And it's the people who stand there in the middle of the highway, like a deer on not even the highway, like on a dark, deserted road in the woods. The deer is standing there and an 18-wheeler's coming. Are you going to get off the road? By the time the 18-wheeler sees you, the driver sees your little eyes, it's too late. And when folks just stand here with a deer in the headlights, like, hey, buddy, are you going to move? This stock is going to go down.
Yeah.
They don't move. Well, now you've given back a lot of your profit. You're down here when you bought those 107s back in here, or 110 or whatever you bought it. You just given up a chunk of it all the way back. Doesn't mean you can't recoup it and get it back if you hold, but doesn't mean it's going any
But
higher.
that feels really bad.
Trust me, when you start doing it, you'll be like, I remember, Eugene, when we went over that, how that felt. So if I can get you to do it right out of the gate, and I'm going to help
First
you
time.
navigate it right out of the gate. I'm like, Sharonda, do this, just here are the reasons why. And then eventually, I'll say, okay, Sharonda, we're looking at this stock, or you tell me what stock we're looking at, and you explain it to me. And it'll take you some time. Well, I think this is what I see, putting the puzzles together, and technically it looks like this, and fundamentally it looks like that. And here's the reason why I would buy it. And you eventually, you'll start to get the pieces of the puzzle until you just get all of the puzzle quickly. You're like, here's what I'm going to do. And then you just do it. Right.
Yeah.
'Cause
Yeah.
you'll process it fast,
Right.
But if you process too fast, because I will always tell you, the money, Sharonda, is in the homework. And the homework is this. and it's this, and it's the
It's
fundamentals.
understanding these
It's
fundamentals,
all of it, you know.
all of it.
And can you put it together? So that's why I do lots of homework on the weekend. If I
Yeah,
want to
that
go
makes
through a
sense.
whole lot of names, I like to get out in front of my money and go through a bunch of names. And then I create watch lists. Watch list. So the watch list may be called January 22nd. Here's the
Okay.
key names on my watch list. And here are the top 4 on my watch list. And I put one stock here, one stock here, one stock here, and one stock here. And then I may put in alerts and open orders. If this stock does this, I want to automatically buy it. And then I kind of have my playbook set up. And then what happens is, you know, pre-market will happen, and I'll take a look at pre-market to make sure there's no goodies. And I'll go to right here, after hours and pre-market. Of course, nothing's going on. Nothing's going to show up because the market's closed. So nothing is actually trading, but it's showing you stuff that happened in after hours. And what that looks like. And then, you know, if there are any goodies on that list, any really good news, something juicy that came out, you know, I might write those names down. I'll put PM for pre-market, and I'll write some names down. And then I'll end up, you know, with some of the pre-market stuff that happens, I'll put some alerts in there. And then
Yeah.
I'll put an alert in for everything for pre-market, but I still have my top 4, what I'm looking at trading and making money on. And then the day begins. And then, you know, if I have sell orders already in, you know, the things alert me, I sold, and I can see it in the message center, you know, what got filled, what didn't get filled. And then, you know, if I sold something, I may now put an alert in. If it comes back down, I'll buy it again. You know, and it's just like Christmas Day when you're really kind of in a rhythm, right? This is gonna be great, right? So, and then that's what you do. And if you're going to be distracted, hey, I'm going to get on the road. I've got to go visit this, you know, medical facility. You know, let me put my stop loss orders in, which should already be in. Let me put my
Yep.
sell orders in, you know, because I don't have time to look at it. I'm not going to be driving and looking. I just make an alert. Hey, you know, Target sold at $149. Like, wonderful. It means I made X amount of dollars. You feel good about it. And then you kind of wrap up your trading day later. You're like, okay, you know, I made money on Target. I'm going to reset some stuff. I really like that stock. I made money here. Oop, I lost a little bit of money here. I got stopped out. And here's what I made for the day. I made $978.52. Book it. And then we
Minus taxes.
Yep. And what you could do then, yep. Yeah, good point. All you guys watching. So
I gotta keep that
978,
in mind.
keep it in mind, 978. You might as well just have a whole other account. And I have a
Right.
whole, let me show you. You know, I'm not playing.
No,
No,
I
no.
remember
You got to
talking
see
to you.
it, but I don't know if you saw it.
No, you never showed that to me.
Nope. Let me cover up the little account numbers. USAA, can you see it? USAA
Yeah,
accounts? Doop.
I see
On
two
the
credit
back,
cards.
operations and marketing, vacation, and oh, taxes.
Taxes? You
Tax-
really have a
No,
I love this.
I do. Hold on.
Okay. That's very interesting. So you have
Hold
different
on.
accounts.
There we go. Taxes.
Oh my gosh. So different accounts for everything.
You do,
Just,
because
just like an accountant.
if you make a ton of money, you better already have those taxes set aside. Because if
Or
you don't, paying them feels really bad. Trust me, I know. Hundreds of thousands of dollars I paid in taxes. So it's really important for me to get
in front of it.
structure right. Like I was explaining to somebody, I said, you know, some of this stuff I need to take through my LLC because I can't fund a retirement account, a SEP IRA, a KEO or a KEO plan. KEO is different from a SEP. Or is it the same? I need to double check. But I have one set up, but I can't contribute to it without money coming through the LLC. So I've got to get my trading business also one as an LLC, as a register with the IRS this year as a trading business.
Okay.
And then my LLC coaching and a bunch of other stuff. I do things with Convene, but I'm going to do a bunch of other stuff. That LLC needs to produce money so that I can show that money and take 25% of whatever the law allows to put into the SEP IRA. So I've got to get a bunch of stuff still set up. I'm going to establish a corporation here soon. Let me stop sharing. Let me stop recording too.